That's a little bit better. 1269, 737. I want to see this, and not just at this level at 1025. I want to see at 1075, 1050, 1025. I want to see the bid getting pounded. Right now, all this tells me is that buyers held, and this tells me that I have a long potential right here. I'm not taking it because, again, once I get into a trade, I'm focusing on the market. So this is telling me right now that the buyers were holding, popped up. I want to see a lot more activity at the bid. And it's perfect. So I pop back over to my volume profile. I see a low volume area here at 1909.75. I've got volume growing, and there's potential for further movement to the downside. When I look at previous day activity, I might start to see 1908, but this 1906.75 is a composite. Actually, 1906 is a composite low volume area right over here. It's a longer term low volume area right here. I can see this. Let me see if I can make this bigger. I can see in my profile this kind of broken teeth. This is getting a little choppy. The volume right now is really thin. So if you ask me if this auction is done to the downside, I would tell you that I would look for a short around 11, 1075 to 11. Right here, you see this low volume area right here? I would look for the print to give me a short around 1075 or 11. There it is at 1050. The reason I want it here and here is just simply because it's less risk. Because if price pops up to about 1175, I'm done with the trade. So it bounced back up to 1050, gave another potential short. $10.50 is a little bit of a low volume area. The reason I said 11 to 1075 is this just provides less risk for me because I'm out on the other side of this low volume area. I'm out. Is it a potential stop run? You know, I'm looking at this, and you know, it was, say, 10 and a quarter was that area from yesterday, and there was a lot of strength, then into weakness. So potentially a stop run, but when I looked at the profile, it was relatively choppy. Now, it's very thin. This data is very thin relative to up here. So to some degree, if I were to start to see this profile build out right here, and I started seeing more volume, that would tell me we have acceptance down here, right here. And that would make me feel better about this short extending. As it is, if price gets back above that 1125, then this could be just responsive buying, and we'll see this thin strip remain for the whole day, and we'll move up back towards 14, 15, if not higher. So this is the key level for me right here at 1125, 11. And if it gets through that, then I would look to see what happens on a retest. If this holds, then I would consider this finished for the day. So that's my thought process on, what I consider finished and an auction re-engaging. I hope that helps answer that question. Did I change my font for OFA? These fonts here, I don't believe that I did. I don't believe I changed my font. All right, we're up at this level now. 1125. I don't see a lot of strength coming back in at the bid here yet. 1150. I see strength at the offer. Nothing in here right now tells me to go short. I mean, there's weakness here, strength here, getting a little bit more strength back here. Now we're getting a developing selling cluster. So it's possible this will tick down a little bit. The only thing I don't like about a short, and a short may work, and again, you got to take your trades where they come. And this is an area we looked at, so it's a potential for a trade. We have a little bit of volume here at 1075 and 11. I really wanted to see more volume growing down here. The fact that it popped right back up in this thinner volume tells me that this could have been more of a stop run to the downside. Buyers, there was a release of inventory, but sellers didn't engage here. They did engage up here, which is good. But I would have liked to have seen a little bit more volume. That's all. But the trade is the trade, and this is the level that we identified. So it showed a potential short selling cluster here developed. Would have been a good opportunity for a short. And again, I'm not going to take, tomorrow I'll take these trades. I'm just not going to do it today because tomorrow I got more material to get through in terms of building the trade plan and doing the homework. And if I start getting into trades, I'm going to be focusing on the trades. You're going to be focusing on the trades, and I'm not going to get through what I need to get through. All right, so building a plan, we put those numbers in from the previous day, and then I start to interpret that information. So I go to this. Actually, I add just a little bit more information to my data. And what I do in this chart, and again, you can use whatever chart you want, is I go from the close. I take the close from yesterday, which is 1475. And in the day time frame, daily, I'm looking to see what were the high volume areas and low volume areas above and below 1475. Because these start to become my reference line. These start to become my target areas, potential targets, and these start to become my reference line for trades. Right here. And then I'll go out to a midterm. So I will take this chart and I'll start identifying low volume areas above the close. So if the close is 1475, then the next highest low volume area is this 1725. And actually it's a little bit of a range up to about 18 a quarter. So I put that as a range, 1725 to 18 quarter, which lines up with yesterday's low volume area. So I've got some confluence, convergence, confluence. Where do short-term, longer-term participants start to agree? And then I'll take, you see this 3075? That comes right from here. The next one, 3750, comes right from here. And then the next significant one I have really is up here at 4475. And then I do the same thing with the high volume areas. So what that looks like, what I've done is I have my longer term composite. I've put my levels in, and now I'm taking those levels to give me context above and below today's close, and I'm popping them into this chart. And this is how simple this is. What I'm starting to look for now is I'm starting to look for numbers that match up, that line up here. If they don't, they don't. But where I have agreement, or these numbers are pretty close to each other, that starts providing more confluence for me, more opportunity for more confidence in a trade. That in this case, 1917 quarter, 1918 quarter is going to provide a good unfair high, unfair low response from buyers and sellers the next day. So that's a key level for me. Does that make sense? So once I've got this chart filled in, and I'm also looking at how is my week developing, then I move on to this trading plan. So somebody asked me about this earlier today. So what I'll do is I'll create my commentary on the day. What happened today? Well, we had a strong open drive with VPOC near the middle of the day. Right? Let me pull this back so I can show you what I'm looking at. Price tested higher several times, but could not gain the necessary volume up here and acceptance to maintain price above low volume area at 1725. So it closed lower. The VPOC yesterday, was within a few ticks of the previous day, and the settlement would suggest that the market is waiting. So somebody asked me this morning, here was VPOC, and the previous day's VPOC was like right on it. What do you make of that? Well, if the market would have closed up here, I would have said buyers have conviction. They were long and they held all the way through to the close. The fact that this closed back down by VPOC yesterday, 1475, suggests that this buyers were buying. They tested. Towards the end of the day, they bailed, got out of their trades, and let the market settle right at fair price. So this suggests strongly to me that the conviction level of the buyers above this level, at least today, is not strong enough to maintain higher prices. So when you see a market close at VPOC that's the same as the day before and maybe close to the day before, and the market is closing around that VPOC, a really strong sign to you that this market is waiting for something, especially within over an 18-point day. So likely this market was waiting for the ECB this morning and jobless claims announcement, especially the ECB, to see what they were going to do. And they held pat on what people expected. The intraday LVA at 1910.75, that held well once price moved above, and very strong responsive buying came in during the pre-market at 1903. So I put that in there because as I'm about to develop my trading plan, I want to note that at this LVA at 1075, it held well. Held, I think, twice, 1075 and then 1125, once price moved above that level. So this tells me that buyers have conviction today at this level. So it becomes an area that I'm interested in if price moves back down there. And then strong responsive buying came in the pre-market at 03 quarter. Another area that if price moves back down towards, I want to pay attention to. Doesn't mean I automatically go long there, but if buyers re-engage, and sellers fail back down at this level, I need to go long. Very good overall volume for the day, and very good range, over 18 points. However, the close back to the middle of VPOC would again suggest buyers were not willing to commit to higher prices. One of the things we saw in 2013 is the vast majority of the days, I don't know what the percentage is, but it was a majority of the days, saw some degree of test lower in the morning, only to have the market close higher in the rest of the day, close higher. And if yesterday we saw at the end of the day this market close higher, what that would have told us is buyers stepped in from the get-go. They held their positions all the way through the day, and even up into close, they held their positions. They did not let go. That would have given us a strong indication that these buyers are continuing to see value higher. Does that make sense? And that goes into your context for building your trading plan. So while buyers were not willing to commit today, they were definitely aggressive, and what did they do? They still held. Right? Buyers still held 15. So when you look at the overall day from yesterday and you see the initiative buying down at these levels, 5.25 from the open, 5.50 from the open. When you see that initiative buying, the context for the day is, yeah, price came back down. They didn't have conviction above that level very well, but they held VPOC. They didn't let this thing come all the way back down into this initiative buying level. So that tells me if price does get back below this 1075, 11 quarter, something has changed from yesterday. And we might see price continue to slide back down to that 550.03 quarter level. So we're getting a little bit more volume below here. You can see price came back up to 1125, moved down, created a new low. I couldn't even begin to think about going long anywhere, even down here, unless price got above this level. Because as I did my homework, that level became context for me. It became an important level at 1075 to 11.25. Now, the other thing this provides you to do is the ability to do a monthly overview, weekly, if you want to make comments to that. And then we start building our scenarios. Remember, first part of our scenario is if price opens up in value. So last night, if I'm doing my homework, or as I'm doing my homework, I'm looking at the day. I'm looking at where price pushed up to the high of day, and I'm seeing a pretty clear distribution or low volume area around the 17 level. The 17 is still a good level, valid level. So now what I start doing in my first scenario is if price opens up above 17 quarter today and comes down to 17 quarter, I'm going to look for an opportunity to go long. That's my first scenario. If the print gives me the message to go long, I'll look for a long there, looking for price to move back up towards the high of day. If it doesn't, if it comes back down and it doesn't give me the information to go long, keeps pounding at the bid, and comes through 17.25, then I will look to take a short off of that 17 quarter level. And that was the short I took over here. If price opens up out of range, or out of today's range, yesterday's range, then what I'll look to do, depending on how far it is, if it's hard to anticipate a scenario that says it's going to open up one tick out of range. You're going to have to start, modifying the plans, and this is what we're going to do tomorrow. We're going to have to start modifying the plans as you get a little closer to the day. If it opens up one tick out of range, yesterday's price range, there's nothing you can do with that. I mean, your first trade scenario is down here. If you get an open drive off of yesterday's high of day, and you get a nice finish, you reject yesterday's prices, you can create a scenario for that. Then I'm looking for a pullback to go long, expecting higher prices, and that's where I start pulling in my information to say if this holds, if we open up above today's range and we move back down to today's range, yesterday's range, and get rejection off it, then I'm looking for 24, and I'm going to look for a test of this 30-31 level. If we get through 30-31 with some strength and this becomes an intraday low volume area, then I'm holding for 33. So I have a scenario now where I could take a long off of yesterday's high if the print gives me confirmation, and that starts to become another level for trade if price opens up above yesterday's range. And if you want to, you can create a scenario that says if price opens below yesterday's range, and you would be using 0325, 0350 as a pretty key level based on what happened here. That would be one of your first areas of trade decision. 1903.50, 1903 quarter. The other scenario is, what if price opens up right where it closed? What if it opens up at 14.75? Well, Draghi has already started speaking. The news is out. If my assumption is that this market is waiting for news, and that news is U.S. jobless claims and Draghi, well, at the open, much of that is either in process or has already been done. So if this opens up back at yesterday's close, then I'm looking for a potential short up at this area, 17 quarter. Does that make sense? Okay, good. So all I'm doing is I'm setting trade scenarios, and I'm preparing myself so that if this market opens higher, I'm ready. And I'm comparing it to the overnight activity. If this market opens up right where it closed, I'm ready. If this market opens up lower, right, if it opens up above, I think one of the things I had is 11, yeah, opens below this 1075, 1025 level. I'm looking to take a short around between 1075 and 11 quarter, 1150. Because those are my key levels. So basically what I'm doing is I'm taking the context, high volume area, low volume area from the previous day, seeing if it lines up with other days, and then taking the short term or this longer term volume profile and say, look, right now, the market's giving me this swing here. One day it tried to pop over 37.75. And I don't know if I'm going to be able to draw this. Apparently my drawing tool isn't working. Nope, not working. You see this swing here? there's a pretty clear distribution where the this 1938, 1945 right here is a little bit of a demilitarized zone, so to speak. But as long as price stays under 37.75, then price is in this distribution. In order for price to break higher, it needs to get through 37.75, and it's got to get through 44.75. But here in my trading, if price closes one day above 44.75, where do you think my next target is? High volume area, 53. If it starts rotating around 53, where's it likely to go test? Right here, 56 level. And where's VPOC for the last 90 days? 67.50. So as long as price is staying below this 37.75, it's in this distribution. Low, high, low, high, low, high. Remember what I talked about today? If price can't get through 24.50 and starts moving back lower, I said this low volume area at 17.25 is at risk, right? Because buyers are proving today that this isn't fair price. And because buyers are only going to get into a position to make money, where might they begin to initiate trade again? Possibly here, but if they're not going to do it here, it puts this at greater risk, meaning that they're probably going to look lower. Where was the first opportunity? That 11 quarter 1075 level. Right here. 1025 rather. 11 a quarter to 10 quarter. And that popped up nicely. Where did it go test? Yesterday's VPOC. If price today was going to start moving higher, we would have had to have seen the market starting to accept price here. We would have need to have seen buyers be willing to take price through fair price. If they can't take price through what was perceived to be fair price before, then it's very unlikely that they're going to take it higher. So in a long here, and I talked about it before, this was the target with a potential short back up around the 17 area, which is the low volume area for the day.